This is Anne-Marie Leake, Vice President of Communications for ePayResources. Welcome to the Payment Space. We are joined today by Lisa Coffey, Chief Innovation Officer with Corporate America Credit Union. Welcome, Lisa.
Thanks for having me.
And we also have with us from ePayAdvisors, Tracy Merritt, Senior Vice President, and Crissy Terry, Vice President for Payments Consulting. Welcome, Tracy and Crissy.
Thank you, Anne-Marie. We're pleased to be here today.
We are talking about instant payments today, and I'm going to start off with a question for you, Lisa. Corporate America Credit Union is live on both RTP and FedNow. What does that mean for your member credit unions?
Corporate America developed our instant payment strategy early on. Back in 2018, we decided to be on the bleeding edge of that development. We felt like that was going to be a huge disruptor for our industry, and we felt like it was important for credit unions to understand the impact that these two rails were going to have on the payment behavior of consumers for the future. And so we were live on the RTP network in 2021, and then, of course, in 2023, we're live on the FedNow rail. And there's so many things that it does to enhance the member experience for our credit unions, because so many consumers now use payment applications like Venmo and PayPal and Cash App, but they're also using applications for side hustles. And that's a huge demographic, I think, for the credit union side, as far as seeing the activity of how many of their members are doing side hustles in addition to their regular job, their main source of income. And those applications for payroll for these side hustles definitely leverage this instant payment rail for instant payment. So we feel like we've set ourselves up to help make credit unions successful in those two arenas so that their members can receive payment instantly, but also leverage the side hustles on the income. If they need money right away, they can get it right away into their account at the credit union.
I was just going to add, I think that gig economy is really a huge benefit, because so many people are, relying on the Uber Eats, and they want to get paid immediately. And so that's a really great benefit for credit unions and banks to offer to their members and customers.
And I think that's a great segue into the question I have for you, Lisa. What do you see from your credit union members as the most frequently used use cases for why the credit unions are implementing these instant payment solutions?
We had an aha moment back in 2021, just us in the product development side, because we were trying to, I think all of us were trying to figure, even the clearinghouse and FedNow, we're trying to figure out how can we get the message on why this is important. And the aha moment for us was, I was paying one of my coworkers for going in on a shower gift, and we did it through Venmo. And we were sitting at a conference, and Lauren, my coworker, was wanting to move the money out because everybody was paying her. She got the gift, and she was wanting to move it into her credit union account, the money out of Venmo wallet into her credit union account. And it showed up. She wanted to do it instantly. If she selected instantly and did the drop down for her credit union, it gave a message that this credit union doesn't support instant payments, and you have to use the 1 to 3 days is what it said option. So we did a snapshot of that messaging that I feel like has gone on for years, but at least on the credit union side, but I would even argue the community banks and even the larger banks don't know of the negative messaging that is happening. So we built upon that and started saying, who else, what other applications are having that negative messaging? Oh, guess what? Grubhub. If you are a worker for Grubhub and you use their app for payroll and you want to move, like you want to cash out from that delivery and get that tip moved directly into your account at the credit union, it'll tell you, this financial institution doesn't support real-time payments. I mean, it says, but here are the financial institutions that do. And so the negative messaging out there for especially community banks and credit unions that don't at least receive on RTP and FedNow, this messaging is hitting your members and your client base today. It's negative reputation risk that I can't move my money quickly. So, I mean, that when we would show those screens in our education process to the credit unions, it definitely built a sense of urgency that they needed to move. And I know this is a long-winded answer, but that's also in to build on that as far as negative messaging is, why are you slowing down liquidity and deposits into your institution? And that's what you're doing by not at least receiving on these two rails.
That's a powerful example. So is this an either or situation? Are you seeing institutions implement both RTP and FedNow?
You know, and people have the right to their own strategy, but I want to make sure that when a credit union or a community bank is making the decision either or both, that they also take into consideration the customer experience or member experience for us credit unions and what that does, because both institutions, both the receiving and the sending institution, have to participate on the rail. So what you're doing is, as far as the negative messaging goes, that if your member is trying to send or receive money to another business or another consumer, and one financial institution is only on FedNow and your financial institution's on both, then they're not going to be able to do the payment instantly. So you're prohibiting an instant payment in that experience for your member, and you're still have the risk of that negative messaging for not participating on the rails or in instant payments. So to me, to have a holistic experience for your client base, you need to be on both, at least receive both.
Yeah, Lisa, I can tell you that has been a very common strategy in my conversations with our members. Is they are either in the process of or planning in the near future of being on both networks for receive, and then sending through FedNow just for the ease of the funds already being in their FedMaster account. So I think that's a really valid point, that you really do need to have all options available, at least from that receiving perspective. Mm-hmm. So I'm curious, how long did your implementation process take? Because I think there's a lot of unknown in that space that might be, preventing people from taking that launch, thinking it's going to take a lot of resources potentially that they just simply don't have. So can you walk through that implementation process to get up and running on both networks?
Oh, sure. So we were on the bleeding edge. So in the early days, it took a lot longer than what we thought. Right. So I don't want that to scare anybody, because processes and, the growing pains and learning from the school of hard knocks, it's definitely a more streamlined. The biggest, as far as for smaller financial institutions and credit unions, the biggest hurdle is the core system. And depending on your core, how far along they are in the process, if they're already live on both rails, then it's definitely very easy, especially for receive. You can be live on receive for FedNow and our RTP within 90 days. We've seen it be a lot less than 90 days, but just to be, give yourself enough time. That is on the receive. On send, it's a little more detailed because there's more risk involved on this end. So there's definitely mitigation steps that you need to consider, what members or clients you're going to offer it to, the send portion, and how the strategy you want to utilize as far as, exposure limits and kind of modeling it after ACH and what you do today. But the receive side is a lot less complicated. And the big thing that definitely I've come across is that you don't have to have your send strategy figured out before you receive. You can receive and then develop what you want to do, what application you want to provide to your members to send. One doesn't rely on the other.
And that's what I'm hearing from our members and clients is that receive first, kind of, dip your toe in the water. Let's get comfortable with it, kind of do that heavy lift of just getting on the system, getting on those networks, and then, exploring the sending potential. But there is a lot of hesitation from a sending perspective. And I think, just from my conversations and even my own self is that fraud component. And so that fear of the fraud and how you're going to handle it. So, the reports I'm hearing from both the Fed and the clearinghouse are there just simply isn't, and I'm doing quotes. I realize we're on a podcast and you can't see it, but like that much fraud. So, define what that much fraud is could be very different from one institution to the other. But Lisa, are you hearing anything from a sending perspective in the fraud?
No. I mean, we've had very few even requests for return of funds. And even talking to the credit unions, we had our first one, I think, last week for request for return of funds. So even that, and there's no obligation to return the funds, right? Because it's irrevocable. But yeah, so it's like, it's very low. But remember, if institutions don't send, then there's not a lot to receive, right? There has to be a balance of both. And I wanted to kind of back up a little bit on something we said is like you might on the receive side do both rails, but send only on one. That still will impact your member or client or customer experience because you won't be able to send to some. If you're only doing send through FedNow, then if the person you're trying to send to institutions only on RTP, then they can't get the funds. Then it has to go another rail. So again, don't want to limit and don't want to impact the member or customer experience in that way. So did I answer your question? I know I kind of bounced around a lot.
You answered it perfectly. And thank you for following back up on the sending perspective for RTP and the importance of that as well. And y'all will have to stop me because if I start talking about fraud, we could be talking for like an hour probably.
Yeah.
But
Crissy just loves this.
But I would like to add, because I think it's important that, the fears are legitimate. Lisa, you're absolutely right. I mean, there's just not a lot of sending activity right now. I mean, I know, the big banks are doing it on RTP, but they also have, a very different budget and appetite for risk than some of our smaller credit unions and community banks. But one of the things that I feel like we should mention to everyone is it's important to know it's still possible. Now, you're not ever going to get 100%, rid of the fraud and take that risk completely away, but there's lots of services available. I'm a fan of a biometric type service. And as long as you're really partnering with someone who can stop the fraud at the front door, so really at that point of entry, that's where you're going to see the biggest impact to preventing the fraud. So in other words, when the customer or member is signing in, they're able to identify through biometrics that, this isn't, it's not Tracy Merritt signing in, because there are things, not just behavior-based, but she's holding it with her left hand and she's normally holding it with her right hand. The angle of the phone, the tapping versus swiping. And as soon as those anomalies are detected, then they use a stoplight approach. So if it, rates high enough, it's a hard stop, it's a red light. And that any movement to go further into the money movement area for FedNow or RTP or any of your other, external transfers, Zelle, any of those things is actually stopped at that front door. And so I think that's just an important aspect to make sure that, that fraud aspect is thought of ahead of time and really considering partnering with someone who can offer those biometrics.
And also, depending on the application you use to send, I mean, you don't have to offer it to all 100% of your customer base. You don't have to offer it if the account's less than 90 to 100 days old. And you can set limits on how much they can send, just like you can in other payment rails, you can do that in this rail as well. So you can do a lot to mitigate and calm those fears for the fraud on the front end.
Absolutely. I always like a tiered approach where, maybe if you don't get it for the first, X amount of time, and then when you do start getting it, your limit's lower. And then as you've earned the right to increase your limit, then you get that because it shows that you're being responsible And then, of course, making sure you have like multi-factor authentication on the front end as well, and one-time passcodes. Of course, we know how those get circumvented by the fraudsters as well. But I think a layered approach is certainly key to include those limits in considering who you're giving access to.
This is incredible insight. Thank you all so much. Question specifically for Tracy and Crissy. Can you speak to the additional support that ePayAdvisors can provide to financial institutions in this process as they begin their exploration of instant payments alternatives, as they create their implementation plan? How can you all provide value in that process?
Yes, certainly. Thank you, Anne-Marie. ePayAdvisors offers an array of services to really support the financial institutions on their instant payments journey. So these services are completely customizable and range from simple to more complex services.
Yeah, and just to add on to Tracy's comment, I mean, so far we've assisted some financial institutions with things as simple as, hey, we're ready to onboard FedNow and RTP. Can you take a look at our instant payment policy and our procedures to make sure they align with the rules and they align with our environment? But we also offer services that can do a complete full process review, which include on-site visits, and we actually sit with the staff and compare what they're doing to the actual policy to see if those are in alignment, and then provide recommendations from there.
Yes, and if you aren't sure about the current payments landscape, we also offer a payment strategy where we gather documents on your current payment offerings and prepare a comprehensive report so you know where you currently stand before moving forward with a new payment reel. And really, anything is possible. We are here to support our members and make sure that they don't get left behind as instant payments continue to grow and just become a critical part of the financial environment.
Absolutely. So what have we not touched on that's important to this discussion? We've talked about fraud, which is always top of mind. What additional tips do you all have for an institution looking to implement RTP or FedNow?
It definitely needs to be in your strategy now. You're already late if it's not. So you need to get with your core system and see if there's limitations there to get on the rails. I would definitely look at both RTP and FedNow just for the member experience, customer experience side of it, but also the negative reputation risk. And if you're struggling with the compliance and the fraud areas in your financial institutions on jumping in and buying in, the receive side it's credits only because it's a credit push system. There's definitely a lot of information that ePay can provide you to show that the minimal amount of risk on the receive side to get, like you said, Crissy, get your toe, step in and get your feet wet before you launch off into the new horizon of instant payments. You can start slowly with receive. It's very little, very, very little staff time for the receive only part. There are no exceptions because the accounts are validated before the transaction goes through. So there's no exceptions there. There's only if you get a message for request for return, and like I said, in 3 years, we've had one. So there's not a lot of day two work for receiving instant payments on either rail. And it's credits. So you're enabling access to that liquidity at least one business day sooner than what you have today, with only having your members have the option to move the money from the 1 to 3 business days aspect for ACH, because basically it's going to default to ACH if you don't have instant payments access for your members. So you're delaying access to funds by not at least considering the strategy of instant payments for RTP and FedNow on receive only. The lift is not significant. It does not take, you don't need to hire more people. And the 24/7, 365, you're basically talking about credits. So I guess the question is why? What are you waiting for?
Great question.
I think a lot of the struggle is, Lisa, thank you for sharing, is the fear of not having resources to handle potential volumes, especially for those requests for returns. And so I think you're right in that now's the time to jump in because the volumes are low from a sending perspective. And so go ahead, get your feet wet, understand the system and processes. And I'd also like to add from a sending perspective, I talked to one financial institution just recently who was already on the receive side for both FedNow and RTP, and they were going to start sending just for themselves. So the wires that they were currently sending, they were planning on only using it for internal replacement of wires, basically. So I thought that was interesting that financial institutions need to keep a very open mind on what the potential is. And their ultimate goal for this particular financial institution was eventually they would open it up to their customers. But initially they were just going to use it for themselves, which I thought was it's a good strategy because they're really making sure they understand both systems and how it can work best for them.
Yeah, and I think ending thought here is just to add on to what Lisa mentioned is, what are you waiting for, right? Is if you're unsure, reach out to your corporate credit union, reach out to ePayAdvisors and ePayResources and see how we can help you so that we make sure that we can all be well educated in the instant payment rail and help you understand exactly what's needed to move forward and so that we can all realize the gain from this instant payment rail that's happening now.
Great advice. Lisa, Tracy, Crissy, thank you all so much for being here today, having this very important conversation. Really appreciate your expertise and your insight. And I know that our members are going to find a lot of value in that. Thank you.
Thank you. This was great. Thank you so much, Lisa.